immediately one thing becomes clear. For the most part, the orange and blue line moves together. But the distance between them expands and contracts dramatically, depending on market psychology. So when the orange line, the market cap, rises far above the blue line, as you could see recently, right? Bitcoin values, investors are assigning a premium to the company. When it falls below, the company trades at a discount relative to the value of the Bitcoin it holds. This leads us to so now we look at the bottom of the chart, right? The lower section shows the net asset value premium, essentially the difference between strategy's market value and the value of its Bitcoin. Look how green it gets when the orange line and the blue line separate. See how green it gets? The green premium, the red discount, and the zero line is equilibrium. So when the stock market's cap exactly matches the value of its Bitcoin. But as you could see, markets are emotional. And those emotions swing widely. So let's take a look at it. May 12th, 2022. 50% discount. This is one of the darkest moments in recent crypto history. The premium plunged nearly 51%. See that little red dot there? Meaning the market value of the company at barely half of its Bitcoin holdings. Wait, you own the thing. You own the Bitcoins. So you should be valued at the Bitcoin. Why did not? Well, there was what at that time the Luna USD collapse set off panic across crypto. This is a big scam. Bitcoin entered a deep bear market. Investors fled anything remotely correlated with crypto exposure. I mean, take a look at Luna USD, but the discount wasn't about fundamental, it was fear. And again, you have to understand that the market is it's a psychological market. Psychological. So the discount, it wasn't about fundamentals. It was about fear. I mean, at the end of the day, you buy or you sell. I decide to sell. That's what happened. So it was fear that crashes valuation far faster than fundamentals justified. Now look at the other one. March 27, 2023. And remember, the reason I'm showing all these bad things, and this is why I want you to join the channel, because what we're looking after, all the black swan, all the bad things that can happen. How do you make money in the stock market or with crypto? You don't make money when everybody else is buying. It's too late, right? You want to make money when they're selling, right? When they're selling, you're buying, and you have to know what you're buying. And more importantly, you have to be aware of risk. Like I said all the time, when you're crossing the street, your goal is not to get run over first and then to get across the street, not to run across the street no matter what. You'll never make it. We wouldn't be talking today. So that is what's important. You need to understand risk. You need to understand where the risk is going to come from. And this is why I created this channel, which is called the Black Swan, because I want to know where the next bad thing is going to come from so I could avoid it. And by avoiding it, you make money. You could make a lot of money by being negative. You could make a lot of money. Universal, Spitznagel, hedge fund manager, made 4,000% during COVID. How? Well, because he hedged himself against the risk of a COVID-related collapse in the economy, and he was correct. Everything was closed. Back to crypto. March 27, 2023. 26%. Second major discount occurred in early 2023. What happened? Well, there was a banking mini crisis, if you recall, including the collapse of Silicon Valley Bank. Large-scale redemptions and liquidity stressed the risky assets. Bitcoin has not yet entered its 2024-2025 bull phase. The company once again traded below the value of its Bitcoin holdings, reflecting investors' hesitation. This tells us something important. Strategy stock serves as a kind of leverage proxy for Bitcoin sentiment. When confidence drops, the stock gets punished more severely than Bitcoin itself. Imagine. The return of confidence. Now we're back to the explosive premium expansion. Now let's look at the other side of the emotional spectrum. You could make a lot of money in crypto if you time it right. Peak premium, November 2024, 229%. This is stunning. It means investors are willing to pay more than 3 times the value of the company's Bitcoin. Why did this happen? Well, basically enthusiasm heading into the 2024 Bitcoin halving, surging institutional demand, renewed mainstream adoption. We're doing great. We were doing just great. The ETF approval momentum, increased belief that active Bitcoin strategy would outperform passive Bitcoin holdings. This was one of the largest premium ever recorded, a 229% premium. It's fantastic. And then, of course, you have the bull market premium, July 16, 2025, 80%. After the parabolic premium of 2024, valuations cooled but remain strong positive. Why? Well, that's the point. Strategy was, the market believed basically that strategy was outperforming mere Bitcoin holding, management decision, likely around acquisition, treasury policy, corporate structuring. Investors preferred buying exposure through the stock rather than holding Bitcoin directly. And of course, we move towards late 2025. And the market collapses. December 1st, back to a discount, minus 10%. That's where we are, right now. After a month of elevated premium, strategy slips into discount territory again. What's causing it? Well, potentially several probable factors. Bitcoin pullback, market exhaustion after long bull cycles, maybe interest rates and macro uncertainty, valuation normalization. But the essential is this: 10% discount after such a long premium is actually mild. Right? It suggests market may be cooling, not panicking. Nothing wrong with that. Interpreting the relationship between the Bitcoin value and the market cap. Over 5 years, we can extract several insights. The stock behaves like a leveraged Bitcoin ETF. Investor optimism is cyclical and exaggerated, and the greatest premium comes when Bitcoin momentum is strongest. And 4, premium crashes usually follow broader market stress. When liquidity dries up, even temporarily, investors abandon proxies and move into underlying asset itself. That's why the red bar corresponds with, in 2022, you have the crypto collapse, 2023, the banking stress, 2025, the correction phase. So why does this matter for investors? Well, we're buying 3 things, right? We're buying Bitcoin exposure, corporate leverage, and market sentiment. This can be good or dangerous, obviously. During bull market, it's fantastic. Premium expands, returns can significantly outperform the Bitcoin. But during bear markets, discount widens. Losses can be deeper and more abrupt. So, as of December 1st, 2025, the company sits around $56 billion of market cap and $50 billion of Bitcoin value. That's a lot, as you could see. So, after a massive 2-year premium wave, the market is now signaling a recalibration, possibly setting the stage for stabilization, return of equilibrium, or depending on macro conditions, a renewed premium expansion. So what does this all mean? Well, what does this all